You know that feeling. The
Yeah.
market news just keeps coming faster and faster.
Yeah, headlines flashing, everyone's got an opinion.
And you're there thinking, what's actually important here? We know you're busy, but you still want the key takeaways.
Absolutely. So that's what this deep dive is for. We've sifted through, news, analysis, blog posts.
All sorts. Stocks, Forex,
A
crypto.
lot. Commodities, indices too. The mission, cut through that noise, pull out the real insights for you.
Okay, let's dive right in then. The first thing that strikes me, looking at all this, is just, well, things feel pretty uncertain, don't they?
Yeah, definitely not a clear picture. You've got talk about possible rate cuts over here.
Like that Commerzbank piece on the ruble.
Right. And then warnings about risks, say, for URUSD from IMG.
But then, boom, strong retail sales data out of the UK. So positive signs too.
Exactly. It's like the market's weighing things up. You've got these solid data points, like the UK sales suggesting some underlying economic resilience.
Yeah.
But hanging over it all are these bigger picture things. Geopolitics, and especially, the US-China trade situation. That keeps popping up.
Yeah, seems to affect everything. The Dow, Treasury yields, the dollar itself.
It's like a constant background hum the market is reacting to, constantly adjusting.
So let's zoom in a bit. Tesla. That stock crash, 50%, that's massive.
Huge. And I saw that analysis, too, suggesting there might be more pain to come, potentially.
So what's the takeaway there? Is it about the EV market specifically? Or maybe, how investors feel about those high-growth stocks right now?
That's a really good question. When a big name like Tesla drops like that, it can be a bit of a canary in the coal mine, can't it?
Right.
It might signal investors are getting nervous about growth, maybe worried about profits down the line, or more competition, or just broader economic jitters.
Makes sense. Is it just Tesla or a bigger trend?
That's what we need to watch. But on the flip side, you mentioned HCA Healthcare.
Yeah, they beat revenue expectations. Good news there.
It's a great reminder, isn't it? Even if the overall market's choppy, specific companies or sectors can still do really well.
And then there's the long game, like TSMC, potential growth over 5 years.
Exactly. Some investors are clearly still looking past the immediate noise, focusing on, fundamental long-term potential.
Which kind of brings us to the Dow Jones pushing towards 40,000.
Yeah, and the fuel for that seems to be optimism about, well, the Fed may be cutting rates and perhaps some better feelings about China.
But as we know, that can change fast. Didn't we see volatility linked to comments from Trump or Powell before?
Oh, absolutely. The market's super sensitive to that kind of thing. One statement can shift the mood pretty quickly.
Okay, let's switch gears. Crypto always moves to its own beat, feels like. Bitcoin hitting $94,000. That gets your attention.
For sure. And that Glassnode analysis linking it to macro optimism and shifting sentiment, it's interesting.
What kind of macro optimism are we talking about, do you think? What's driving that part?
Well, it seems like crypto is getting more tangled up with the traditional economy story.
How so?
The idea that general economic optimism boosts Bitcoin suggests maybe it's seen less as just pure speculation now, perhaps more like an inflation hedge, or reacting to hopes of easier money from central banks.
Okay, I see. And Ethereum, that golden cross signal they mentioned.
Yeah, for people who aren't deep into technical charts, that's often seen as a potentially bullish sign, like maybe an upward trend is building steam.
But crypto still has its unique challenges, that story about North Korean hackers going after developers.
Yeah, that's a stark reminder. Security is still a huge issue in the space.
Does that kind of news put a damper on things? Or does the price action just, steamroll over those worries for now?
That's the constant tension, isn't it? Big price jumps bring excitement, but these security risks, they're always there. They can cause real fear, maybe big drops if something major happens. And then you throw in something like GameStop maybe getting involved with Bitcoin. That's another curveball. Could impact Bitcoin, meme coins, who knows? It's very dynamic, unpredictable sometimes.
Let's talk Forex. USD. Seen some differing views there. ING worried about 1.1250.
Yeah, flagging that as a potential risk level.
While other reports had it climbing towards 1.1350 recently, what's pushing and pulling that pair?
Well, currencies often reflect the relative economic health, right? and what central banks are expected
The
to do.
Eurozone versus U.S. economy and policy.
Exactly. And USD is huge, so it reacts to data from both sides. That optimism about U.S.-China tensions easing, that could boost the dollar, pushing USD down.
Okay.
But flip side, any new uncertainty about U.S. policy could weaken the dollar, helping the euro. It's a balancing act.
And that Scotiabank analysis, you mentioned JPY, GBP, UR, seeing weakness there linked to trade headlines. It really shows how linked everything is.
Totally. Forex markets often give you that instant read on global risk appetite. Safe havens might strengthen when things look shaky.
While currencies tied to trade feel the swings more.
Precisely.
What about commodities? Gold hit records, but now there's talk of a temporary setback. Seems a bit odd after such a run.
Well, it's pretty normal, actually. After a big price jump in anything, gold included, you often see some cooling off, people taking profits maybe.
So just catching its breath.
Could be. The big run-up was likely driven by, inflation worries, geopolitical stuff, so a setback might just be the market digesting those gains before deciding what's next.
And oil. OPEC plus coal, Kazakhstan, potential production increase in June. How does that play out?
Supply and demand basics there. If OPEC Plus pumps more oil generally, that tends to push prices down, assuming demand stays steady.
Right.
And they're thinking about this even with those tariff concerns still floating around. It's complex. That cautious positive view for WTI crude below $63, even with the tariff stuff, suggests some support, but also nervousness about anything upsetting that supply-demand balance.
So, taking a step back, looking at the whole picture, it feels like U.S.-China trade is just woven through almost everything we've talked about.
It really is. It's such a dominant theme. We saw the Chinese embassy statement, Trump clarifying semiconductor tariffs. It's a constant driver of market movement.
The two economies are just so connected.
Hugely. So any shift there sends ripples everywhere. Stock indices, currencies, commodity demand. It's all linked.
Even with positive domestic news, like those UK sales figures.
Yeah, that shows local factors matter, but this huge geopolitical trade dynamic often overshadows things. And layered on top of that, of course, is what everyone thinks the Fed might do with interest rates. That's another massive driver.
So pulling it all together then, what are the main things jumping out at you from this whole deep dive?
For me, it's just how interconnected everything is. You really, really can't look at stocks or crypto or oil in a vacuum. They're all reacting to these big macro tides and geopolitical waves.
Wow.
And there's definitely a lot of uncertainty baked in right now. Different sectors, even different stocks in the same sector are behaving quite differently.
So no single clear path forward for the markets then?
Doesn't feel like it. It's more about navigating these cross currents, understanding how, trade talks here might affect currencies there, or how rate expectations influence stock valuations.
It highlights the need to be, nuanced in how you look at things.
Exactly. And that's the key takeaway for you listening. We're in this environment where lots of different forces are pushing and pulling. Staying informed about all these different potential impacts, trade, economic data, policy shifts is really crucial.
So wrapping up this deep dive, we've seen this real mix of signals, haven't we? Trade tensions, economic data points. They're clearly central. It's a complicated picture.
It absolutely is. Which kind of leaves us with a big question for you to chew on. Given everything we've just talked, through all the uncertainty, the potential rate moves, the trade stuff, specific asset behavior, what single piece of news or data do you think will have the biggest impact on where markets go in the next few weeks?
That's a good one to think about.
The financial world keeps turning. Things change fast. Your own read on what matters most is key to navigating it.
Definitely food for thought. Well, this deep dive gives you a snapshot based on what we have now, but the market story, it's always evolving. Thanks for joining us.